Welcome to TIDI Academy India.
Hello traders, I am Prithvi from TIDI Academy. This video is all about options. So everyone's favorite concept is options. So now we are starting with the basics of options concepts. Welcome back to options episode number 5. So now we will see option Greeks. So what is option Greeks? Means suppose if you took some trade. So after that the market movement went according to your direction or went opposite to your direction. So in that time, so whether how much you are getting the profit and how much that you lose in that trade. Now we will see. So which are all the factors that comes in a option Greeks means delta, theta, gamma and vega. These are all the things, the factors that affects in particular premium prices. So on based on the market direction. So in this delta and theta, these are all very much important. So more the people they lose money based on lack of knowledge in these two topics. So now we will see how it works option chain that is present in Sensibull. This is the Sensibull platform that we can see. This is the strike price and these data which is on my right side which is the call data, and on my left side as you can see these are all the put data. So here the complete option chain which is minimized compared to NSE. Okay. So now we will see what is delta and what is theta, how it works. So when we come to delta, so if you buy this particular LTP with this strike price, if the market moves, think that if the market moved 100 points up after you are buying this particular strike price with this LTP. So how much the delta which is present in this 0.48. So if the market moves upside, how we have to calculate is 0.48 into 10. So in this particular premium 4.8 points will be added for this particular LTP which you have bought. So the particular profit is 4.8 and the LTP that will be calculated along with the movement and for the particular delta which is present for this particular strike price. So if you buy this ATM strike price, you get the profit around 4.8. So like the same way, if you go in the money in the call side, if the market moves the same thing for the 10 points, you get the profit around 0.78 into 10. If you calculate, that will be 7.8. So as and when you go deep in the money and if you buy, you get the more profit, and when you go deep out of the money or the out of the money, you will be getting the minimal profit. So what we suggest is like go at the money so that your profit and loss will be minimal. So like the same way, when you go to put option also. So when we go for put option when the market is bearish, when we go for call option buying when the market is bullish. So here also as you can see the LTP and delta. So based on the market movement, so in this option chain the data which is completely there, which is completely dynamic, so which is not static. If the market is moving any of the direction in the put side options and the call side options, every data except the strike price, each and every data which is present in this option chain completely varies and it depends on the market direction. So here also if you are buying the put option when the market is going down. So if you buy, if the market goes in your favor, means if the market falls 10 points, means how do you have to calculate means here in this particular strike price, so what is the delta which is 0.52. So you will be getting the profit of 5.2. Suppose if the market falls 100 points after you are buying this put option, so that time how you have to calculate 100 into 0.52. So how much it will be? Around 52 points. So like that we have to calculate and we will be getting the profit. As and when you go deep in the money, you will be getting the more profit, but here in the money risk is more and reward is also more. So when you come to out of the money, risk is also less and reward is also less. Okay, so now we will see what is theta. So for the buyer, if the market moves from 800 to 850 and 850 to 900, these premiums will increase based on the delta. So think that the market went sideways. It's not completely uptrend or the downtrend. Think that the market opened at 19,850 and went to 19,750, again came back to 19,850. So on that particular time, if I am buying in the morning and the market went to 750 and again came back to 850, your premium will not be same as when you bought in the morning. So that will be decreased. So how much that will get decreased? That will tells theta. How much premium that gets decreased in this particular LTP, that shows by the theta. So at the ATM side, on the call side and the put side, both nearest to the ATM, the theta will be more. As and when you go deep in the money or deep out of the money, that theta will be less. Though, so as you can see here on the call side and the put side, the more theta or the more decay which happens at the ATM side and the less decay happens on the OTM and in the money side. So like the same way as you can see in the call option, here also put side also, as you go deep in the money and deep out of the money, so theta will be less. Some people, they will be thinking like when they have bought in the morning, so after that the market went up or downside any of the direction, again came and closed on the same price where you have bought, means that time they will be in loss. So why? Because when the market is completely sideways, not any of the direction, so that time theta will act on that particular time. So when you are buying, the market should be in your direction, and when you are selling, market should be either in your direction or it should be in sideways, so you will be getting the profit. So if you want more information like this and further more information, you can contact or you can come to TIDI Academy and learn more.